folks, welcome on back here to the Diagnostic Trading Hour right here on TFNN, broadcast live inside the eSignal platform on your computer at TFNN.com on Tiger TV and on your mobile phone at TFNN.mobi. Let's check out where the markets are at right now. We got the S&P is currently up a little over 6 points right now. We got the Russell is up just about a point. NASDAQ up 5-6 points right now. We got the Dow up 62. We're going over at our gold market. We got gold down $2. Other metal markets here, we got silver, and that is down about 0.25%, with copper up a little over 0.25%. Going on into the energy sector, natural gas currently up 2% on the day. Nice solid move on natural gas as normal. And looking on over at oil, it is down about 38 cents right now, so almost 0.5%. Looking in our ag markets, we got corn is moving down $4, and we got soybeans down 14, both over a 1% downward move in the agricultural markets. Hopping on into Forex, we got pound dollar currently up 8 pips, euro dollar's down 42, euro pound is down 29. We got the dollar CAD currently up 31, dollar franc up 9, US yen up 3, pound yen up 8, euro yen down 28, Aussie yen down 19. And dollar index currently up 0.193 on the day, and we got the bonds right now pretty flat on the day. All right, well, that catches us up on your current lunchtime market wrap. Next thing we do, like we do each and every Monday, is we hop on in and we check out the upcoming news reports for the week so we can get that fundamental news plan in place. Again, even if you don't trade the news, okay, even if you don't trade the news, you want to know about the news because you want to make sure you don't get surprised by it, okay? And, you know, if you're trading oil and you don't know about oil inventory, then you definitely end up trading the news whether you want to or not, right? So you want to make sure you have that plan down. It's good to have expectations down. That can help you a lot on determining possibly if you're trading a market specifically that it impacts. It can help you know how much to expect in a movement on it. So going down and looking at everything, we're going to just check out sort of the current market wrap where we're at and what we had on the list. So let me pull up two things for you. One, of course, we have the pound. Right now, obviously, Britain had a holiday. And so that can impact the liquidity there a little bit as well. And being a bank holiday there, so you always want to be aware of that. And so we'll look at it to see, did it impact it? Did it make any significant change? Sometimes it can make something move faster. Sometimes it can make it move slower. Usually it just results in a pretty flat market, okay, on that currency pair. You'll see that especially on like yen, whenever there's yen holidays, like on Sunday or Monday. You just see some very range-bound markets staying inside the expected ranges pretty much every single hour. And so looking at the pound and checking that out, you can see that we are seeing that. So just scrolling on back, I mean, besides a little pop there just early in the morning, a little extra volume kicking in for those 2-hour period there. But beyond that, you can see the rest of the markets right there just staying inside the range the entire time. So just really butterfly city there. Iron condors, whatever. Iron condors would probably be pretty tough, be very little IV in there, but easy reversal trades to go in and do. Easy spike strikers to go in and do. So there's some things that, think about and keep on your roster, again, for, holiday trading, okay? And I'm not talking about, necessarily, major holidays where everybody shuts down, but individual FX holidays, it's a great time to look at, sort of a classic, boomerangs on the ranges and spike strikers. So, because there'll be just these little pumps of volume, even though it's not a lot of volume, there'll be these little spikes in volume that normally wouldn't be there if you had the normal volume going on in that currency. So you can see it. I mean, pound dollar there's usually quite a few in pound dollar anyway, but just diving into it, you can pretty much tell. Let's see here. We'll shrink some of these down. Look a little bit closer at the pound to see, what could you have done on it? What could you still be doing on it? But, you can look at it and see that, if we're going in here, and let's go to the regular U.S. session. There's a 10-minute, 5-10, go short. You go short on it. There's a 15. 5-10-15 didn't break the high. There's a 5-minute. And finally broke the high there. You got a 5-minute, broke the low, so you got a nice short. 5-minute didn't break the high to go long. 5-minute broke the high to go long. 5-minute goes short. You know, I mean, just over and over again, like profitable. That one would have been a little bit, well, actually, 5-minute didn't kick until here, so nope, good on that one. That was just flat. 10 minutes, 5, 10. Let's see, nothing there. 10. Right there, goes short. Yep, so another profitable one. 5-minute didn't break the high on that one. So, I mean, just lots of easy, profitable spike striker trades that took place this morning. And I'm just on a holiday. So, sort of one of those things you wouldn't think to look at them on a holiday, but since the volume's so low that any kind of volume coming in can easily cause a volume spike, which will, you know, I mean, it's like right at the expectations of movement and stuff like that you're seeing a lot of these spikes happen. So, you know, came down, expected move, boom, pop, buys it on back up, you know. So, anyways, just keep that in mind for future bank holidays. One of those little lessons you can, you know, jot down to learn. Bank holidays on, you know, currencies, specific currencies like pound or euro or, you know, yen, Aussie, especially, things like that. That's where you'll definitely want to look for those. All right, so what else do we have that we could be paying attention to? We had another, you know, we had the new home sales trade come out this morning at 10 a.m. And so these are just sort of a lessons learned, you know, things that you can, you know, like I said, you always want to, you know, make sure you're logging those lessons and taking away some lessons. But, you know, what are we in August 25th right now? And let's see here, trying to pull them up for you. But I know we were looking at a potential new home sales report. And let's go ahead and pull up that euro dollar trade on here. And let's see here. I'm typing in my information to pull this up. All right, so right here, go in, we'll get loaded up, and again we have the new home sales, so you can see that came in at 412,000 with an expectation of 426, so quite a bit worse than expected. And the release came in at right there 10 a.m. So if you're looking at this trade, you could have been looking at a 9 to 11 on the trade. And let's just see, you know, was it a flat trade like normal? Yeah. So 4 pips net. You know, if you did a 9 to, you know, high move right there, we're going to move up about 12 pips. So pretty easy. You know, I think we're talking about 20, 25 pips last week on the trade. Pretty easy trade. Pretty simple trade to get on there. Let's see here. So that's really just a quick review on that one. It wasn't a major trade that we do all the time, but just wanted to pull that one up. Let's see here. All right, so I got to type in all the stuff to get the stats to pop out. All right. Tonight, not really much going on. I got trade balance New Zealand dollar. Not a major mover there. SPBI and the yen at 750, but I mean it's very, very minor impact report. Going into tomorrow morning, let's see how things change up for us. And okay, we may even look at the trade balance for tonight, but we can't do New Zealand dollar. Never mind. I always want to trade the New Zealand dollar. I'm like, come on. So that's one of those things I'm hoping Nadex will add in. Anyways, okay, so looking at tomorrow morning, BBA mortgage approvals, probably not a whole lot to look forward to on that. And let's see, core durable good orders right here in the U.S. That is definitely a trade that we'll want to analyze. And then we'll, we could probably look at consumer confidence with it. Okay, so we'll go ahead and analyze those two trades. And I put on a be aware for the Aussie dollar tomorrow night. Just be aware, if you are trading the Aussie at night, 9:30 p.m., they have a construction and work quarter-over-quarter report coming out. Should have a minor impact, probably not anything massive, but, if you have a really tight stop and the thing moves 15-6 real quick, you may get a little upset. So just one of those good to be aware events, but, not usually a major thing. It's construction work done. So a lot of it ought to be, accounted for, and shouldn't be too many massive surprises there. Okay, so let's dive into these two reports on durable good orders and consumer confidence. Let's see here. Okay, what do we got? Let's see, with durable good orders, this is for Tuesday. The release is at 8:30 a.m. So we're going to be looking for an 8 to 10 a.m. We're going to be checking out the euro dollar on core durable good orders. Expectation is 0.5% for the release number, so depending upon, of course, the fundamental shock and all that fun stuff. And where do we end up at 10 a.m.? So let's see. Looking at the historic results over the last 12 releases, we got a move of 3 ticks, move of 21, and let's see here, move of 3. I mean, pretty small there. One of them a move of 6. It actually moved down like 30 and popped back up. So that's just something to be aware of. It does have some volatility, but it usually pulls right back to where it was. Looking at today and the one before, 3 ticks. Again, that's after moving quite a bit. Let's see, going in, previous trade, 21. So we got a couple 20s and quite a few 3s. Let's see here, we got 18. That one moved 40 ticks and pulled back to 18. Okay? So pretty much that's right around 320 mark moves right there so far. I got a 17, and we got a 14. We got a 17. So a lot of 17s, 20s. Handful. Let's see, this one's 6, so several 3s and 6s. Let's see, one before that. We got 16. So really, I mean, despite the few that moved about 40 pips and pulled back, usually we're ending up between 8 and 10 a.m. somewhere between about 5 and 20 ticks. So at a minimum, at a bare minimum, you'd want to get, I'd say, $25 minimum profit. Ideally more than that, because if it ends up as one of the 20s, I mean, you're talking about making like $5 less fees. There's really not much there. But if it is one of the ones that moves like 3, then not too bad. At 25 as a minimum, then also you could have a that 1-to-1 risk reward, like right there, about a $50 or 50 pip move against you. So which should be more than enough even on the bigger moves. So 25 pips, 8 a.m. entry, 10 a.m. expiration for Tuesday on the euro dollar. All right, folks, go on back here to the Diagnostic Trading Hour. And so we're looking at each one of the upcoming news announcements. We just knocked out the durable good orders. I'm going to check out consumer confidence report here and see if we got anything that we might be able to take advantage of. Let's see here. That report, the last one was 8 to 10. This one's going to be released at 10 a.m. on the CV Consumer Confidence. And let's see if we got a consistent stat that might let us get a nice flat trade. So looking at 11 a.m., let's see here. We got a move of somewhere between 3 and 11 pips. One more time you get in there. 21 pips. Looks like 19. And let's see, 4, 11. Really the same thing. So if you wanted to double layer these on, so there's a little bit of movement, you could even end up hedging yourself off a little bit, is go in at 9 o'clock for the 11 a.m. expiration. So again, that's 9 o'clock for the 11 a.m. expiration, and look for the same thing for a $25 minimum profit iron condor. Okay? And that would be really the 2 trades for tomorrow. Beyond that, just be aware of the construction work done, but beyond that, that really should be the massive trades. Also, your BBA mortgage approvals on your be aware for the pound if you are trading early this morning, like around 4:30. Okay? Looking at Wednesdays, looking pretty quiet overall. We're going to have, let's see here, our crude oil inventory report. Obviously, checking out Spike Striker on that. Also, look at your ranges, see if there maybe is a potential iron condor or straddle set up. Who knows? And let's see, 9:30, be aware, private capital expenditure coming on out. 9:30 on the Aussie dollar. But nothing to really, trade on that. Just, one of those things to note on your calendars. Know it's coming out if you are trading in the evening. And then rolling on over to Thursday. On Thursday, we're going to have a slew of euro announcements coming out. So coming out, 3 o'clock, 3:15, all the way down. So I would just make sure you definitely note that. It ought to, there ought to be a lot of little events. And, with enough of them, if there's enough surprises in there, it can add just some nice volatility. Hopefully we'll get to take advantage of that in the morning. But just be aware that between like 3 and 4 o'clock, there is quite a few announcements coming out in the euro. None of them being ones to trade specifically, but just ones that you want to know about, that they're happening. So when you wake up in the morning, you can go back and you can check that news, see what happened, how's it impacting it, what's it looking like fundamentally, what's it looking like technically. And hopping on forward, we got the preliminary GDP coming on out of the U.S. We got jobless claims, which is sort of going to be overshadowed quite a bit, most likely, by the GDP. And then we got pending home sales. So obviously on every news trade, always be checking out the spikes. But going in and looking at GDP specifically, so U.S. GDP, this is the preliminary. There's advanced, preliminary. All those go together. And obviously certain ones have a little more impact than the others. But you got your advanced, you got your preliminary, you got your final. And I guess different news services call them different things. But basically this is like the second report. So it's not as impactful as the advanced, but it still can have quite a bit of an impact. And let's see here if I can find the last. I'm looking at the preliminary GDPs because they really need to be individually analyzed. And with that coming out at 8 o'clock, we could be looking at a 9 or a 10. And let's see here. So looking at 9 a.m. for 7 to a 9. Well, actually, you wouldn't be able to do the spreads then. That's the binaries I'm thinking of. No, yeah, they got them every hour now, don't you? So you got 7 to 9. Okay, so we got 7 to 9. And we got 11 pips, okay? Going on into the next one, we got 15. We have 7. Let's see here. Pretty small, man. Pretty surprised on this. 3, 4, 7. We got a 50 pip one, so a big move. That was December of 2013, so a little while back. And really, until we go further back, we're not really seeing moves of that much size. But even before then, not that big. 15, 2, 18. So pretty small moves. There's a 31. That's back in July of 2013. So a couple big moves, but overall, I mean, you're talking mostly 15 pip and less. So on this one, I would actually go in for a 20 pip minimum profit on, which sounds insane, but I mean, just looking at the stats, they speak for themselves. On the euro dollar, 20 pip minimum profit, Iron Condor, and entering at 7 for a 9 a.m. expiration. Buying the lower spread, selling the upper spread over on Nadex. All right, we'll be back right after this. All right, folks, we'll come back here to the Diagnostic Trading Hour. All right, so we're just diving into each one of these. We just knocked out the GDP. Jobless claims, you can do the same thing. Obviously that's the same. We're going to trade the same trade, except for you can go and look at spike strikers on various markets for trading those as well. Hopping on over, we also have pending home sales coming out right here. And so let's take a look at that and see what we can do with it. We got pending home sales going to be released at 10 a.m. on Thursday. Expectation at 0.6%. And what kind of movement can we expect? Let's say we're looking at a 9 a.m. to an 11 a.m. expiration. And we got 3 ticks. We got 26 ticks, a little bit bigger, or 22 ticks. There we go. A little bigger move, but still not that big. We got 20 ticks, but overall, it looks like it's trying to stay in the 20s. We got 20. We got 3, 14, 20. A little consistency there. 22. Let's see here. Close like 1. 1. Literally. And then 13 ticks and 20 ticks. So lots of 20s in there. I need to at least pull some profit. No less than 25. I mean, obviously I'd like 30 or 35. I don't know if you're going to get it, but no less than that. And so entering at 9 a.m. for an 11 a.m. expiration, no less than $25. Ideally more for an Iron Condor. Buying the lower spread, selling the upper spread. And basically, I'm trying to tell you how far I expect it to move or less, okay? So when I say 25 pips, that means I expect the expectation of the movement to be at most about 25 pips or less than that. Now, it may move 5 or 10 beyond what I say and then pull back. I expect by the close for it to be the or less side, okay? So we may get a little bit, maybe 5 or 10 ticks above that, but by the time it's all said and done, less than 25 pips. If you see the market move that far, expect a reversal. That's probably where you're going to see a spike striker set up and get fired off. It's right about that pip movement if that happens. Okay? If you're trading directionally, tighten your stops. Expect it to pull back right at that point, because that's pretty much all we expect, at least between the 9 to 11 o'clock hours. They'll also have natural gas storage, so let's see. So with natural gas storage, spike strikers, potential iron condor setups, potential straddle strangle setups, but spike strikers are usually the easiest to do out of that group. Going into the evening, we're going to have a whole slew of economic reports coming out of the yen. None of those are really tradable events, but you should have a big be aware note for 7:30 and 7:50 for, I mean, there's household spending, Tokyo core, national core, unemployment rate, preliminary industrial production, and retail sales. We got 6 reports coming out of the yen over a 20-minute span there. So do not be surprised to see some volatility on the yen 7:30 on Thursday night. Make sure you get that as a be aware event. And when I say those, I'm just saying make sure you're paying attention that these reports are going to be released so they don't catch you off guard. All right, roll it on into Friday to wrap up the week before the Labor Day weekend. And I'm excited. Labor Day weekend coming up. It'll be my birthday, so that's good. And also, the other thing is that we're going to go in and that's when the big news reports start coming back out. And that's when people start coming back from vacation, and that's when the volume and the volatility starts picking on back up. So usually by the end of the first week, definitely in the second week after Labor Day, then we start seeing the markets wake up a little bit more. Let's check out, that's just the seasonal cycle. So check it out Friday. And going on in, we've got Friday morning. We're going to have just a variety of reports, nothing to be too concerned about unless you're an early morning trader, but not a whole lot there. Most of these are pretty minor impact with no consistent impact. Going on into, let's see, the one thing to look at, housing starts. I do actually have stats on that. So let's pull that up. A little bit different report, not usually looking at that one. But my engine does have those now, so we can go in and pull them up and look at them. And let's see, let's look for like a 7 a.m., see if we can actually get some decent activity on this. And so looking at a 7 a.m. expiration, and let's see what pulls up. Okay, we got 10 ticks, we got 3 ticks, 5 ticks, 15 ticks. See, big move, 36, 30, and let's see here, we got 8, and we have 9. That one, though, was sort of odd. The market like shot up at midnight there, so a little bit before midnight. So we may want to wait till midnight on that one. And let's see here, we got, so get back over here to 7 a.m., like 2 ticks, and 18, 26, 2. Lots of small ones, a handful of 20s and 30s. We're going to go ahead and go with 30 pip minimum profit, Iron Condor. And I went back and looked at it. It actually would work out just fine. So we're going to look at an 11 p.m. expiration for a 7 a.m. or sorry, 11 p.m. entry. 11 p.m. entry for a 7 a.m. expiration for the 1 a.m. housing starts on the yen. And gives you quite a bit of time there, so like 8 hours. So you got to have enough time value, hopefully, to be able to pull that off. But 30 pips may still be too heavy on that. We'll see. But go for 30 pips minimum take profit if you can get it. If not, then, you know, whatever. But just no trade. Doesn't hurt you anything. But if you can get it, then awesome. But 30 pips minimum take profit, minimum profit potential. And that's going to be on the housing starts Iron Condor on Nadex. And that'll knock that one out. Going in, looking at the GDP on the Canadian dollar. That's going to be coming out with quite a bit of releases on the U.S. and the CAD. So looking at the GDP, that's definitely going to overshadow our personal income. So we're going to combine all these together into $1 CAD trade. And let's see what we're going to be looking for. We got an entry at 8 a.m. for a 10 a.m. expiration. And let's see, how far does the market usually move when the dollar CAD GDP comes out? Well, we got a movement of, well, let me update one thing here. Here we go. Okay, we got a movement of, wow, not a whole lot. So like 3 ticks release. Another 3 ticks. Let's see, we got 10 ticks. So many of these moves you would just think would be massive, right? And you find out that they're really not. I mean, sometimes they'll move like 20, but they'll come right back. And so I'm looking for the consistency on where does it end up by 10 a.m. And 10, 11 ticks. Let's see here. We got a 23. That's a big mover there. We got 3 ticks. Again, we got 8 ticks and 6 ticks. 16, 6, 11. Okay, so we're going to go for 20 ticks on this trade. So 20 ticks minimum profit potential. Iron Condor, buy the lower spread, sell the upper spread. Okay? And again, that's using Nadex spreads. If you don't have a Nadex account, just hop on over to Nadex.com. Do this like right now. Just go to Nadex.com. Go to trading account. It's free. It costs you nothing. They give you a $25,000 paper money, funny money account. You can go in. You can learn how these things work. Just put in your username, first name, last name, phone number, and email address. They will email you with a password to log in. When you're ready, if you want to get that demo extended out to last longer, whatever, fund a live account. If you fund it with at least a minimum of $100, you can put $1,000, $5,000, whatever. But the only funding requirement to open an account is $100. And no day trading restrictions like stocks. You don't have 25 grand a day trade with. No margin calls ever because every trade is fully collateralized. And you know what your risk is maximum going in, and you don't have to hold on to it. You can get out. And you can do the binaries and the spreads. We've been talking about iron condors. We've been talking about the spreads today on the news trades. That's what we normally are doing. We're usually doing iron condors or occasionally straddles if it's a high-impact event that's actually going to move the market. Don't trust those little red arrows on Forex Factory and everything else. I mean, they're great, but they don't really tell you when it moves. Okay? And as you can see, we're talking about 5, 10, 20, 3 pips. You'd be severely disappointed doing straddles on those trades. But you can hop in there and think of this as options for day traders. Think of it as, risk management for Forex and futures traders. Maybe you're a stock trader. You just want to figure out how to get some leverage and make that little account work a lot harder for you. So get that massive leverage, but where it doesn't cut against you. But hop on there. If you open an account with $100, if you do at least one trade, now you can put 100,000 in, you put 100 in, you can do one trade, you can do thousands of trades. But if you do the minimum of $100 deposit and the minimum of one trade, you can get that demo account extended out for a year and be able to keep practicing and learning as you're going. Ideally, want to get to live as soon as possible, but making sure you're using good risk management. You know what you're doing, make your mistakes. Basically, you're trading for skill, and that's what demo trading is about. When you first begin, again, it's trading for skill, not trading for income. As you get that skill down, then you progress to income, and you start very small, insignificant amounts of income, but it becomes real money. Make sure you're practicing the exact same rules. Once you have that down, then you progress forward, and now the goal is how big can I get this position within proper risk management? Because really, when you want to start making money in trading, you're going to get it from size, not volume of trading, but not volume of trades, but the size of your trades. And you're really going to go for that because you don't have to trade a whole lot of trades. You got to trade some size when you do make those trades and make them count. But again, good risk management, always having that proper expectancy that you got to manage that risk and don't expect it to be profitable. Don't expect it to lose. Just expect to follow the trading plan. And, if you have that potential for profit, awesome. And go in and, if you see the opportunity, then take advantage of it. Anyways, but check it out. You can find that link right there again on the homepage of TFNN. Also, you can check out my box scanner where it'll go through. It's over here. You can check it out for free. It makes this whole thing a whole lot easier right here. And you can hop in and you can just analyze these spreads in seconds instead of going through and pouring through it. And people get in and they're like, oh man, it looks so complex. It's like, no, it actually makes it a lot easier. So I go in here and I hit one button and I'm like, well, I want a one-to-one trade and I don't want to risk more than $100 on a trade per contract. I may do 100 contracts, I may do one. And there's every straddle right there. There's my straddle setups. And so I could do, a smaller straddle, a larger straddle. Well, what's the difference? Well, this one expires in 16 minutes. Well, I don't want to do that one. 76 minutes. Okay, so we got two of those, two sets that expire in 76 minutes. And then you say, you know what, look at this. The ones that expire at 2 o'clock, $4 risk, $6 risk. Okay, like it's the exact same trade. Like there's maybe $1 difference on the trade. So get another hour for free. And then you look at these two right here. They're the same amount of time to expiration, 76 minutes. They're the same distance to break even, same premium built in, okay? Same risk, but one of them's wider than the other, so because it started earlier. This one started at 1 and went to 3. This one started at 7 and goes to 3. So it's wider. So you can actually make more money. Now that would require an absolutely massive move on your dollar. I doubt we're getting 95 pips in the next hour and 15 minutes. But it doesn't cost you anything to get it. Okay? So you might as well, obviously, go with the larger one. There's no reason to do the smaller one. So both of those are right there. There's your straddle. And then you just click the button. It opens it up. You can execute the trade directly by initiating the ticket out of here right into the Nadex platform. Makes it really easy. Does all the math for you. Lets you, basically scan and narrow down the contracts that fit the trade that you're trying to do. All right. What do we got going on this coming weekend? August 30th, nothing. You're going to have August 31st. On that Sunday, there is going to be a slew of reports, nothing that we're going to be worrying about trading, okay? On Monday, we're going to have Labor Day. So Canada is going to be closed. The U.S. is going to be closed. Most of the markets are going to be closed down, so just be very careful. They'll open back up on, Monday night, and we'll have the building approvals there for the Aussie dollar. Let me see here. And then we'll go into what we got Tuesday. Now this we're going to get a little bit we got a Aussie GDP. We're going to have the interest rate coming out on the Aussie. So Aussie's going to start picking up. We'll have to cover this plan a little bit earlier because I'll be probably out for a day from what I'm hearing from my family. We're going to be taking off. But services PMI, Bank of Canada rate statement, overnight rate. So we're going to have the Canadian rate statements coming on out. Okay, they're on Wednesday. And on Thursday, we're going to have unemployment claims. We're going to have the revised non-farm productivity report. ADP, NFP is going to be coming out. We're going to have the British interest rate statement coming out. We're going to have the Euro interest rate statement coming out. We're going to have the Euro press conference, which is a big mover coming out. So that's Thursday. Walking on into Friday, we'll have the official NFP. We'll have the unemployment rate and employment change. And the unemployment in Canada. So it is going to be a packed, solid week of news that is really going to rock the markets. So it'll be a fun week to come on back and get things going. Okay? So just make sure you got that set up. And we'll probably start a little bit early on this news plan. We'll try to get you going, focus on that a little bit more tomorrow, and walk through each news trade for next week, get you a week in advance. And trading season is back on. As the holidays are over, summer's wrapped up, the kids are all going back to school, and most of the vacations wrap up, and volume just picks up. That's just how it works. All right, we'll be back right after this. All right, folks, we're back here to the Diagnostic Trading Hour. So just going through and doing a quick wrap, looking at some of the major indices here. We got the S&P this morning. Really quiet. Notice we didn't really less than 1 out of 5 hitting expectations on volume. Moved about 0.75 at the peak there out of a deviation move, but did it really, again, on light volume. So not a lot of expectations of massive trends when that's taking place. We can hop over. Let's check out a couple of the other indices, see how they look. But I'm sure we're going to see a pretty similar story across the board. Let's see here. Pull up the Russell. See how that's doing over on the ICE exchange. Again, really low volume. Not expecting it to, make any kind of major trend. It actually started finally picking up over here. And we moved again about 88% was the highest movement we had on a high to low there on the deviation level. And so really basically moved about its deviation, pulled on back, bounced right off a settlement. Not a big surprise that we got that pullback off settlement. And this morning, again, not expecting it to take off, not expecting it to trend, not looking for a trend trade because expected volume consistently under expectations. Hop on in looking at, let's see, that'll give us Russell. Let's go ahead and check out NASDAQ. And over here on the NASDAQ 100 here, the NQ, and sort of seeing the same thing. In the morning, not a lot going on. Started picking up a little bit. But, again, not having the averages there, drops right back off, completely flat. If you're in a trend trade, sort of get out of it, right? Volume does pick up, flies on back down, wear back down. Great gap fill trades this morning. Low volume, great gap fill trades. That's even something to consider looking at there. So see if those two are connected. And let's wrap it up. We'll look it over here. Let's see. We'll check out the Dow. Maybe we'll check out a couple commodities too. But look on over at the Dow. This expected volume is so huge because it really helps you see if you should expect a trend. Is it worth putting your money in for a trend? And we got some movement. I mean, I'm not saying they're going to get anything. Got about 40 points, but that's really not that big of a move. That's like a 4-point move in the S&P. That's really not much at all. And it also maxed out about a little less than 70% of a deviation move. Again, very light volume till that one little down move right there, 12-1, just to take profits going on. And then it just, went quiet again. Checking out our oil markets, and really just bringing everything back to this expected volume to help you see, do I think this thing actually has a chance to take off? So oil this morning, doing pretty decent. Did have a little bit of not more than, but I'd say there's a few bars that are more than. Started off this morning really solid. We're exceeding or meeting expectations most of the time. Really backed off between 10 and 11. You can see how volume just backed off. That's a good time if you are in that short trade to go ahead and hop out and just take it. Volume picks back up to the upside and starts oscillating, sort of backing off again. Again, a good time to maybe get out if you're long at that point. Falls on back down on expected volume and just starts doing the oscillation dance there. So move of about 85% at its peak from high to low on a deviation move. But just a pretty quiet trading day. Don't be surprised to see some quiet trading days this week. Now, going over and looking at something that's a little bit more active, we could check out, natural gas and see how that's looking. And pretty light volume on that. Looks like most of that move that we got happened in the early morning hours, and then it just nothing. So, again, these are great iron condor days, iron butterfly days, when there's not a lot of volume going on. This movement was at, early in the morning. Probably Ukrainian stuff driving this, who knows? But who knows? Doesn't really matter. If you were it up, you didn't take advantage of it. This is when it happened, when all the movement happened in your wake. No volume, no trend. All right, y'all have a great day, and I'll see you tomorrow right here on the Diagnostics Trading Hour.